All right. Good morning, everybody. How y'all doing today? Hopefully, you guys can hear me. Can everyone hear me? I can't tell if I'm broadcasting. Hey, okay, I was in the wrong. I don't even know what happened. I think my streaming software changed something. Could you guys hear me? I think I am in the right place now. I don't know what happened. Loud and clear. All right. I guess you can hear me. Sorry about that, guys. Something's different with this software. Yeah, it's the same stream key for both. All right. I don't know what happened. The software changed something. I'm going to have to figure this out. But anyway, I'm in here now, so that's probably why there's hardly anyone here. All right. It is what it is. And the markets have opened. All right. So soybeans went too fast. We'll wait for a new one on that. Well, that's not true. Just going with the get in sync setup, either the trackable trade or the most current one. Usually it's the most current one. This one here, 8:30. Yeah, I had plenty of time to get that trade placed. 14 seconds, and it just hit target one. So if anyone's interested in learning about how that soybeans trade is, how we figure it out and all that, I was hoping to do that before we got into the session, but that's the trade, and it's already hit its first target. So we can look at that. As far as the Dowie Mini goes, a couple losses to start, unfortunately. And a bizarre case here where the setup came scrunched right in between those two lines. And one tick outside of that would have gave a nice trade to go short. So unfortunately, a little bit out of sync here with the YM. Strange start to the morning. Like logging in this morning, I have done nothing different. I did the same thing I always do, but the streaming software, I think, changed stuff. And it confused the stream key that I use for this session with the crude oil report, which is the same stream key. And I guess now you can't have duplicate stream keys. Anyway, not going to bore you with the details, but I believe something like that happened. Let's just review crude oil then. This is interesting also. So 9 a.m., this went too fast, obviously, right at 9, unless you're anticipating the setup somehow. Otherwise, you grab the long trade here, and the long trade's a nice winner too. Remember, you're not going to jump short here without an adjustment. And the adjustment of 2 ticks lower, like we typically do, keeps you long, and then that's going to come all the way up and hit targets 1, 2, and 3. Remember, the strategy exists beyond the dots on the chart. You have to know how to use it properly. So crude oil with a really nice trade, actually. You just have to look past the colors and the dots because the system gets confused, doesn't know that we're making that stop and reverse adjustment right here. That's something the trader has to know. So one and done on crude, bottom line. And yesterday, I mean, obviously the first day of the new contract, Monday, was pretty crappy. Yesterday, total opposite of crappy. First trade of the morning right here. John, you probably called this, I'm guessing. What a beauty, huh? 2 strong winners in a row after Monday's not so great session. Something to keep note of, the first day of a new contract is often pretty lousy. Not always, but often. Regular set, John, you're saying it was scheduled for 9:30 p.m.? I'm just reading your notes. So there was a mistake on the schedule. Maybe that's what happened. Ah, okay. Must have been a typo or some mistake. I'll have to talk to Kat about that. So then when I logged in, YouTube probably thought I was doing the crude oil session because that came earlier. Hey, Johnny. Probably because of chronological, the schedule probably popped me into the, oh, okay, I see what happened. Bummer. Probably a bunch of people confused trying to come in that don't know what to do. All right, well, so is this the crude oil session report, John, that we're in now? Oh, it does say that, crude oil inventory report session. Well, that's too bad. I'll just leave this one running, I guess. All right, anyway, there's your first trade on the YM. Clearly we missed it because we were looking at crude oil. Not the first trade, the next trade. There were a couple losses. So this is the third trade is a nice winner, of course. Good morning to you, Miles. I could see people are slowly finding their way into the room. Quick look at unleaded also. What happened this morning right at 9. That was too fast. Yeah, this was a little bit rougher, wasn't it? A couple losses before a small winner, and then another loss, and then another winner. Pretty dicey session this morning on unleaded gas, as you can see. Pretty lousy chart pattern there. Price action was not good. So unleaded gas, we're going to chalk that up as a losing session. So I got the two Renko charts with the micro NQ here, the faster one and the slower one. I'm really liking the slower one. And whether you wait 4 minutes or not, I'm still thinking it's a good idea. And maybe miss this trade. You would have had to wait 3 minutes and get in on that one. Because that one did come before the 4 minute. Once 4 minutes passed, it was already beyond the entry. I don't know. Maybe not. I'd have been able to grab it here. Faster chart. Definitely, this is your first trade here. The question is, are you trading against the blue line or not? We were talking about how another trader in our trade hacking club takes the trend mode indicator from Counterpunch and changes it to a 50 and uses that to filter trades. I don't know if he waits 4 minutes. I don't think he does. But he does it on the slower chart, not on the faster chart. This is a faster chart. So a couple of interesting ideas. Ultimately, he wants to trade in the direction of the prevailing trend. So the short trade would have been avoided, and here's the long trade now. Again, he uses a slower chart, though. This one may be too fast. Look at the slower one again. It's still long. Different approaches, right? The one above, well, these are both Catapult, and he uses Counterpunch Trader. So there's a difference. Both are good ideas. It's just a matter of what you're used to and comfortable with. Oh, yeah, I'm reading your comment, John. Shit happens. What are you going to do? Let's check back on this soybeans trade. So the soybeans trade, just to clear things up, you want to take the newest setup, and we do use add-on trades. You could decide not to. I mean, if you do your own testing, an argument could be made to just use the trackable trades, but I've always used the add-on trade. So the newest trade is this one. Still not start time, and by the time the start time comes, that's the most current setup. So 8:30, you got your setup, short at 13.43. And then it comes down, and it hits it right there. That's 8 seconds in, but you still have more time after that to still grab it, and then it just plows through, and it hits target one. That's 3 points, right? 12 ticks. And it misses target 2 by 1 tick and then stops out right there. You could borrow the trailing stop from the prior. You could also change the calculator to only track, to use this as your first trade of the day. If you're using the full counterpunch trader, there's a cool little tool in there. You could open it up, and where it says set up start time, you could type in 740, for example, and then it turns everything off prior, and now the add-on trade becomes your first trade of the day and trackable by the software. That's pretty cool. It's a nifty little tool. You could do that on the fly. So now the calculator tracks the trade for you, hits the money management of target 1, stop moves down, starts trailing. John, you're putting in the Unirenko inputs for that slower chart on the MNQ, correct? So everyone who's interested in that chart should take note. If you're using Ninja, the Unirenko, not to be confused with Unabomber, in order to do a 12-point bar and a 3-point offset, you would put in the numbers that John just gave you. So it's 12, 3, is it 12, 36, 84? Man, that's confusing. And there's a mathematical formula for figuring that out, right? $12-tick trend. So that's the size. The size of the bar is trend. Wait, 12-tick. Even though it's a 12-point bar, it's a 12-tick trend. 36 open and 84 reversal. I don't know where those numbers come from. I mean, the 36 ticks makes sense because that's a 3-point offset. But the rest of it, I don't understand. Everything measured from prior close. 12 plus 36 equals 48. Good morning, Pamela. Let's see if everything's measured from the prior close. So here's the prior close. 12, 3, 40. I'm not going to try to do the math in my head. Anyway, copy that formula down, guys, if you're using Unirenko. All right, so let me just see if anybody has any questions. There are 4 installed indicators. Oh, yeah, Johnny, good. That's a really good question, actually, and sorry to be so tricky. I'll show you where it is. You have to look somewhere else. When you're looking in your indicator list, so on 9.5, it's insert analysis technique, and 10.0, it's, what is it? Insert something else, I forget. But you want to go to the Show Me tab. So you're looking in the indicator tab, which makes sense, right? But for this specific, all right, studies. Anyway, for this specific indicator, the counterpunch calculator, you have to look, and same with the counterpunch express, I believe, maybe not. But you look and Show Me. Oh yeah, it's in the counterpunch express is here too. And you got to go down to NP CP calc. It was just named that a long time ago, and it was a big mess to try to change the name, so we just left it. NPCP calc in the Show Me section. There's indicator, Show Me, paint bar, activity bar, probability map. Look and Show Me, you'll find it. You're welcome. Yeah, that is a little tricky, isn't it? All right, here's M2K. Here's the micro Russell. And wow, not that much price action or movement this morning. This is Catapult. No filters or nothing. So the first trade loses 190 ticks or 19 ticks, but the second trade gets it all back with the scalp and run. Not much of a run, but definitely some nice targets 2 and 3. 21 ticks and 28 ticks. So kind of slow. Not a lot of range this morning. The Russell, at least with the micro. Could look at the full size contract, and also let's look at a couple different things. So that's Catapult, and now it's in a long trade, by the way. And this is without using a filter. Like it could be, we could try putting on that 50 moving average as a filter. Could be interesting. What I like about this is that the risk reward ratios are really good. Like you could scalp the target 2 and you're going to be making more than what you're risking, like almost every time or pretty much every time. So you can see it's already hit target 1 and it's a break even. But putting on that 50 moving average with the colors as a filter might be an interesting idea. You get a better feel for the range with the tick chart, and it looks kind of lousy, but let's go back and follow it. So 830 right here. So you can get in sync. Well, actually, you're not going to get in sync with that because that trade would be over. So the purple trade is the trade. And that's a nice winner, isn't it? So Counterpunch Trader getting it done. Target 2, remember, with the 377 tick chart. Nice winner there on the Russell. The calculator, of course, is tracking the earlier trade. But remember what I said, you could open up the calculator, type in 8:31 as a start time, and you could take that add-on trade and turn it into the trackable trade like so, you see? And you could learn to do that on the fly, and then you could use the actual calculator. Look at target 3. That's about all she wrote before it starts heading down. So one and done, no matter how you look at it with the 377 tick chart. Just got to remember to turn off the timing on that calculator for don't get messed up for tomorrow. What else do I got here? Oh, okay. Spotlight, the 1.5 point momentum bar, looking pretty good here too. Yeah, you'd have to see if you could have got short here. It's possible. I can't tell if that happened too fast. Sometimes it spikes through too fast, but if so, obviously it loses. It's an unfortunate. That's like that one where the entry was inside the lines and was filtered out, and this one is like a hair outside of the lines. So maybe you just use that as a filter mentally. But anyway, you have to act fast. The next one, though, few options, a few chances to get in on, and that's obviously the winner for the morning. Perfect target for. That's how Spotlight looks. Bit different, right? The momentum bar doesn't really look the same as a tick chart, but it caught the same move, just caught it differently. The NQ 610 tick. This is a long-running counterpunch plan. It's done well for years and years. So let's see how it did today. So the first trade was a losing trade. The setup happens here, and it's filtered out. There's a reason why, because of trend mode, right? The line is blue. It turns red for one moment, and if you catch it, maybe you get short here, but odds are you miss it. Anyway, right in here is where you get short anyway. So it's going to lose regardless, but then the next trade wins. Bit of a consolidation type of morning, isn't it? Got another loser, and then a target one, partial winner, and that's all she wrote so far in this one. So not a lot of range this morning, and so far shaping up like a consolidation day. Here's a case where the trade gets filtered out, and then when the filter comes off, you could see it reprinting, but the price is already way down here. So it ends up being a non-trade. And that filter is the chop filter, of course. You can see the chop dots. You're above the 50, so it's not letting you take the short trade. Sometimes you wish you did, but in the end, the chop filter works out. Like if you look over here, you see the chop filter saves a losing trade. Because again, you're in the chop zone. It's also blue instead of red, but when it turns red here, the trade doesn't reprint because you're still in the chop zone. And if you're in the chop zone and you're above the 50, the entry, like the 50 moving average straddles the entry in target one, it filters out the trade. We used to say follow the yellow brick road. So you can go long trade works, but you can't go short. Because even the long trade, that's in the chop zone. But you're above the 50, you can go long. Just can't go short. That's how that filter works. And over a lot of trades, it definitely makes a difference. But it's not perfect. No filter's perfect. Let me know if you guys have any questions about that. I'll be right back, guys. Sorry about that, guys. Um, all right. Well, unless there's any more questions, I think what we'll do is we'll just go into radio silence, and I'll leave the session running since the Wednesday morning session kind of got mixed and blurred up with the crude oil session. Most of you, I guess you're in the crude oil session. I can see that's the title when I look at my screen. So I don't want to end it because I may not be able to reopen it. So I'll just leave it running, and I'll be back in here, in about 22 minutes or something like that. 20 minutes, 22 minutes. Unless somebody has any specific questions, otherwise, I'll see you back here right in front of the crude oil report. Oh, yeah. Hey, John, thanks for pointing that out. All right, I'm back on the mic, obviously. Um, we didn't look at that one yet. I'm not seeing. Oh, I see. It's this one here. Yeah, so this one hit target one. Yours is still going, I guess. Oh, yeah, because you put the trailer at 49. Yeah, so this is a good example of the strategy existing beyond the dots because I don't have key level adjustments turned on. So we know that if a stop is at 51, we're always going to adjust it down to 49. And it never gets to 49. And so the stop holds at 49. And that little adjustment is enough to keep the trade in through all its targets. And at this point, you need to know how to trail. So you just trail 2 pips below the signal line or the balance line. You see it in the calculator. And you can mark it with a horizontal line. So this bar just closed, for example, here. So you wait for the bar to close, 73.88. That would go to 73.86, but of course 6 gets adjusted down to 4 because of the key level. So 73.84. And you could just use a horizontal line like so to track your trailer. John, you must have a different trade because obviously on mine you could see it went through all 4 targets. But anyway, that's an interesting look at the difference of a very subtle thing working around key levels. So you don't put your stop at 51. You leave it on the other side of 50 at 49. And that look at the difference that would make. Great example. If you have a question about that, let me know. And then also I put the 50 trend mode indicator on this chart, and you could see that it prevented 2 winning trades. So is that good? Is that bad? Who knows? I mean, I'm just looking at it for the first time. Ultimately, it requires testing. And whereas this idea might work better with a faster chart like NQ, I don't know how, or MNQ, how it works with a slower micro Russell, I don't know. And honestly, the Russell's only $50 a point. I mean, the micro is $5 a point, right? But the volume is so much better on the full size contract that I prefer. I'm going to change the symbol here and see how different it looks. If it maybe it doesn't look different, but I want to check it out and just put on the full size Russell. And I'm looking 120 days back. That's way too much. Oh, I was doing that because of the automation, just to get performance reports. Yeah, so it looks a little different. Not a lot, but 57,000 full size contracts. Well, M2K wasn't that far off. Let's look at M2K again. M2KU. John, I think mine did get in sync, actually. I was looking at the 830 bar, and then there was another bar after that spiked through. I'll double check. Yeah, so anyway, you could see that this is 42,000, and this actually looked more active than the full contract. That's interesting. And again, we could look and see what happens with this 50 moving average, but on a consolidation day without a lot of trending action, it's going to be really slow and lagging. And I'm not sure it's the right approach. Just looking at how it works today. Your entry was right in the zebra stripes. Yeah, so 830 is in here, right? Right in here. And then it does stab down. And that's before it hits money management or anything. So right here on this bar, it's going to get in. So that counts. That's valid. That's 5 minutes in already. The bar before is 30 seconds, 27 seconds in. Yeah, different broker, different data feed, different look and feel, different entry. Could be a little off here and there. Any questions about that, anybody? I know sometimes there's a lot going on in here. We got Counterpunch Trader, Catapult Trader, Spotlight Master Suite, and just trying to give a little bit of everything for everybody. But if you see something that, or don't see something that you want to see, or have any questions about anything, even a swing trade or a forex trade, then that's all fair game. Feel free to ask. I will say our pound yen 4-hour chart is still going strong. As always, it's been winning in the 85% range for a very long time. Just hit this target one here. All right, so now I will truly step away and I'll see you back here in about 15 minutes. All right, I'm back, everybody. Good morning again. I apologize if some of you had a problem getting into this morning's session. There was a mistake with the timing. This morning's session was set to 9:30 p.m. instead of 9:30 a.m. Simple mistake, but it definitely messed things up. Anyway, here we are. All right, so that's the Spotlight Master Suite chart, the big one on the right, 8-tick momentum bar. The chart on the lower left is a 377 tick chart with crude oil, with Counterpunch Trader. Kind of moved away from that recently because it just doesn't behave as it used to. Not sure what happened or why. I just know that it doesn't do what it used to do. And the chart on the upper left corner is the unleaded gas chart, also with Spotlight Master Suite. You can use Counterpunch and use an 8-tick momentum bar and probably do quite well. So if you don't have Spotlight and you want to try to move off of the 377 tick with Counterpunch, you could try an 8-tick momentum bar or range bar on NinjaTrader and see how you like it. I suspect it would do pretty well. It's not something I've tested, but just knowing the strategies as I do, it would probably work fine. It's worth at least checking out. All right, so we'll let the report come out and then we'll wait 2 minutes and then we'll start looking for trades. Trading's risky. All the trades discussed are for learning purposes. This is not financial advice. Just because we did well in the past doesn't mean we're going to do well today. All the risks you should know about already. Don't trade with money you cannot afford to kiss goodbye. Very important to always understand the risks involved with trading. So we should see the reaction here any second. There it is. Of course, now we'll wait our 2 minutes. All right, so everything's currently flat at this point. Still got 45 seconds to go. That is a short setup there, but a lot could happen before the start time. It's still good to keep track of what that is just in case. And now it's already gone too far, so we don't have to worry about it. All right, so again, flat on the right on our spotlight chart, and we'll start looking for new setups here. Now that 2 minutes has just passed, and that is a long trade, and that's long from 98.81. 98.81 is the entry to go long. It may cancel in a moment, and it did. Now there's a short, heads up. The short is at 98.50, call it 98.58. Pushing into the lows of the day. The stop is at 81. It just blew through its targets, guys. Move your stops to break even. Hopefully you had a template place with targets and you made some money. Now you're at break even and it already went through all 4 targets. No time to mess around. I placed the trade and couldn't even get my targets placed, but they all got hit with nice profits regardless. And anyone trailing now, move your stop to 98.41. Sometimes the markets move fast. There's nothing you can do but your best. This time in our favor. 98.32 is the stop now, 98.32. This is where belief and confidence in your trade plan is essential. There was time to place the trade. There probably wasn't time to get your targets placed. But if you have your template, you would have targets placed. They just wouldn't be the ones that are printed. They'd be different targets probably. All right, so the stop is still, I haven't moved it. It's still at 32. And now it's done. So stopping out at 32. That's it. That's a wrap. One and done. Anyone get that trade placed? Now, if I could do it calling a trade room left-handed while walking on my treadmill, which is what I'm doing, if I can do all that, you can do it too. It takes practice. It takes having your chart set up properly. Some of you might be actually doing chart trading, which is even faster. Just click on the chart and your order is placed with templates. I was using the matrix on another monitor, which is a lot harder, especially left-handed. I won't get into the why I do it left-handed. I am a right-handed person. I also play drums, so I'm kind of both-handed. But anyway, let me know if you have any questions. I mean, we're pretty much finished. I mean, we could review. Let's see what happened on unleaded. So wait 2 minutes. That went too fast. I'm going to say that's not going to be tradable. 3 seconds, no way. But the long trade, totally doable. And that one is a big winner. Still going. So unleaded gas, one and done with a nice big winner there. Todd wants to review filters. Yeah, for sure. We'll do that. Let's see what happened on the 377 tick chart. So in the past, we had a lot of bars, and now we don't, and I don't know why. And that's one of the reasons I moved off of the 377 tick with the crude oil report, because I want to get my trading done quick, and this takes forever. And if you wait 2 minutes, you miss the trade anyway. This is the trade here. You'd be in this trade and winning now. So this is the first trade of the morning. And it's a big setup, 52 ticks of risk. It just hit a 42 tick target 1 and trying to get to a 65 tick target 2. But, I mean, there used to be a lot of bars and a lot of setups, and now there isn't. I have no idea why. We still have a lot of volume. So who knows? Did they change some formula in measuring ticks? I don't know. That's beyond my pay grade. All I know is that I don't like how it looks. It did just win. 377 tick, a really big winner. one and done. All right, so that's the session, guys. Todd, the filters, let's take a peek. So if you open up the calculator, cruise on down. If you're using Counterpunch Express 2, you have to do the filters manually. All right, so we've got the CHOP EMA filter. We were just talking about that earlier today. So that's in relationship to the CHOP dots along the high trend CHOP indicator, the HT CHOP indicator down below. Okay. When you're in the CHOP zone, it's going to filter out some trades, but not all trades. I'll explain. Let me make this bigger so we can walk through. I want to see where it actually filters something out. Well, I'll just show you right now that, like right here, you're in the CHOP zone, and none of the trades are filtered out, and they actually win. And there's a reason for that. So when you're in the CHOP zone, if the price is above the 50 moving average, it's going to filter out short trades when the 50 moving average straddles between the entry and target 1. You're above the 50, and it will prevent some short trades. It did not prevent this one because this is totally below the 50, right? It has to be above. The 50 is this mustard colored line. So if you're in the CHOP zone and you're below the 50, it's going to filter out long trades when the 50 moving average straddles between the entry and target 1. So we used to call that the mustard line because it helped us remember that the setup, it's not cutting the mustard. So that was an easy way to remember. And I could show you, let's see, we had something earlier today where that filter was in full display. I'm trying to remember what chart that was. Was it the Russell 377? I don't remember. Let's take a look. Yeah. So here's an example. Now remember, filters are not perfect. Sometimes they filter out winning trades. But when you look at a big sample set, 100 trades or more, you'll find the filter prevents more losers than winners and actually helps you in the long run. So it's a nuance that just adds maybe a 1, 2, 3 percentage points to the win rate. And that adds up over time, right? And we learn that when we use the automation, actually. We can learn that the filters do help. In this case, here's a good example. There's a short trade right here. Notice it's grayed out. Gray means it's filtered out. There's a filter. In Spotlight, gray means flat, stay flat. Counterpunch didn't have that development yet as far as how we use colors, but we did show these setups in gray so we could learn from them. You can turn that off, by the way. You don't have to even see it. But the way Counterpunch works, sometimes you'll see a setup here in gray and then the filter comes off, and Counterpunch is smart enough to get in sync with the trade, and the trade will reappear in full color several bars later. So that's why I like to show it. But anyway, here's an example of the mustard line straddling between the entry and target 1 on a short trade. The entry is above the 50 moving average, and we're in the CHOP zone. And that's an example of a trade that gets filtered out. It's also an example of a winning trade that gets filtered out. So there's your irony working. Again, filters aren't perfect, but that does demonstrate how the filter works. There was another example where we saw, all right, so there's a good squeeze zone, a couple squeeze zone filters. I'll show you that next. Yeah, it must have been another chart. Maybe it was the NQ. I don't remember. We had an example of the chop filter where it worked. It prevented a losing trade. And then, anyway, Todd, before I go on to the next filter, let me make sure you understand the chop filter. Does anyone have any questions about the chop filter and how it works? It doesn't mean don't take any trades. It only filters out some trades when the 50 moving average straddles. And if you're above, it's for shorts. If you're below, it's for longs that it filters out, right? You're not fighting the 50 moving average. That's why we make it kind of yellow, mustardy. Mustard for the mustard line idea. Yellow for follow the yellow brick road idea. Just little cute little phrases to help you remember. Now, to dig into it deeper, if you want to learn more, the chop filter is based on the Bollinger Band squeeze, where the Bollinger Band squeezes inside of the Keltner channel. That's the chop zone. It's not the squeeze filter. Don't confuse the squeeze filter with the chop filter. The squeeze filter, I'm using the word squeeze for a completely different meaning. They're different filters. One or both could be active. So I'll show you the squeeze filter in a moment. The chop filter is based on the Bollinger Band squeeze. Again, not the same squeeze as our squeeze filter. That's the chop filter. But that's also why we don't filter out all trades. Because when you're in the Bollinger Band squeeze, the chop zone, in other words, pressure builds in the market and you can get a pretty strong breakout move. And a lot of times we're able to catch that by trading in the direction, by not fighting the 50 moving average, by trading in the direction of the 50 moving average. And that's where that follow the yellow brick road phrase comes from. Again, it's not perfect. And the longer the chop zone, like the more dots along the bottom and the longer that you're in the chop zone, the greater the pressure and the more likely for a big breakout. So these are all little nuances that's good to learn. Now, all right, so is that clear? Is the chop filter clear? Yes, and that means Bollinger Band squeeze, and it means filtering out some trades, not all trades, based on what I just explained. The straddling and the direction of whether you're above trading down or below trading up. Make sense? If you look at this example here, it just explains it perfectly. Above the 50 moving average, but trading down, a short trade. The 50 moving average straddles between the entry and target one. Because we're in the chop zone, it's filtered out. Not squeeze chop, just chop. The chop is based on the Bollinger Band squeeze, but we don't use that terminology. We don't need to. We just call it the chop filter. The squeeze filter has nothing to do with the Bollinger Band squeeze. The squeeze filter is a different concept. Inside, it's the other filter. So if we go back to the calculator, you asked about FO1 and FO2, right? So I just explained FO1, the chop filter. FO2 is the squeeze zone filter. Different filter. The squeeze zone filter has to do with the space between the 50 moving average and the 200 moving average. When the 50 moving average is moving down to meet the 200 moving average, look at how the space between is pinching, squeezing, getting tighter and tighter and tighter and tighter. That's the squeeze zone. Has nothing to do with Bollinger Band squeeze. Has nothing to do with the chop filter. It's a separate filter. It works in a similar way, though. If you're in the zone and you want to go long against the descending moving average, the 50, it gets filtered out. Notice these two longs are filtered out. It's in the squeeze zone, trading up against the descending 50 moving average that's moving down to meet the 200. The 200 is that magenta, that dark wine colored. I make my EMAs darker so that they don't affect me psychologically. It reminds me not to give them too much importance. I like to know where the 50 and the 200 moving averages are, but I don't use them. I don't give them more power than they should. The trade setup is still more powerful. But the filter itself keeps you going in the direction of where the odds are. Going long when you're in the squeeze zone here against the descending 50 moving average has less odds than a short trade going down. So the opposite is true then. If the 50 moving average is moving up, squeezing up, and you have the short entry inside above the 50, above the ascending 50, then that's going to filter that out. Yeah, EMA convergence, whatever you want to call it, but it's the space between is getting squeezed. So that was just a real simple way to describe what it was. So chop zone filter, not the same. The entry is not even inside. And here, the 50 is moving away from the 200. It's not a squeeze zone anyway. Like this short trade was allowed because for it to not be allowed, this pink line would have to be the 50 moving average coming up. So it's when the 50 is moving closer and closer to the 200 moving average, that's where you get that squeeze zone. And that's what those filters are. There's also a nuance. It's called the squeeze zone tolerance. And this is what you could discover with automation. It's this tolerance ticks. And what that means is that let's say you have an entry that falls into the squeeze zone. All right, it's going to get filtered out. But what if you get an entry that's just 1 or 2 ticks outside of the squeeze zone, but maybe the spirit of the squeeze zone is still in effect because nothing's perfect? You can use automation and create a tolerance that gives you X amount of ticks beyond the squeeze zone that will still apply the filter. So if the squeeze tolerance ticks is set to 4, and you have an entry that's 1, 2, or 3, or 4 ticks beyond the borders of the squeeze zone, where it would have been filtered out if it was in the squeeze zone, but it fell a little bit outside of the squeeze zone, it'll still filter it. That's what the tolerance, it's a very subtle setting. We don't talk about it much. It's one of those things that you'd need to have a lot of data, and you could use the automation to come up with an optimized number. So it's not something you try to use on a futures chart because you're just not going to be able to get enough data because contracts expire. You can try it with a continuous chart, but that won't be accurate either. Where it becomes useful is perhaps with a long-term Forex chart or a long-term equity chart. You might try the squeeze zone filter and see if you can come up with a tolerance number that impacts your win rate by a little bit. Yeah, it's something we don't use much, but it's definitely there, and it may have some functionality and usefulness for some markets and charts. All right. So I see a lot of people in the room right now, and a lot of you missed the crude oil report. And now that you have me with you, I want you to take advantage of this, our time together. I'm with you. So if you have any questions, this is a great time to ask. Todd, thank you for the excellent questions. You gave me something I could explain, which I know for a fact most people did not understand how those filters work. So hopefully now you guys understand. You know, filters are great, but they're a double-edged sword. Sometimes you're going to filter out the winning trade that would have ended your session the way you wanted, but you missed it because of the filter. And then the next trade is not filtered, and that's the one that loses, pouring salt on the wound. And that is going to happen sometimes with a filter, because filters are not perfect. But it's only one session. It's one sample. It's kind of meaningless, because you can compare that one losing situation where the filter messes you up versus a lot of situations where it helps and avoids losing trades. And so you have to trade the imperfection for the overall longer term better winning result. Does that make sense, you guys? But that's what you have to know about all filters. So here's an example. I'm working on a new roster of charts, a new roster of trade plan charts with Counterpunch, because these are the kind of charts I like to trade inside of my retirement account using a weekly chart. So here's a good example. USO, right? US oil. This trades really well with Counterpunch in general on the daily chart. But on the weekly chart, it also trades amazing. But I want to show you something interesting, because I'm going to show you the difference of a filter being applied versus not. And the filter is the trend mode. So let's look at this bottom one in the right-hand corner. Trend mode, you could do this manually in Counterpunch Express, but in Counterpunch Trader, you could literally flip it on, and the calculator will apply the filter. It means you can only go long when the line is blue, and you can only go short when the line is red. So here's a short trade, but notice it's grayed out because the line, when the last week closed, the line was still blue. Now we're in the middle of the week, intra-week. This bar won't close until Friday. If it closes red, you'll see this trade will reappear in its full color because the filter would have come off. Of course, it might be in the chop zone, and I'm not showing the 50 moving average, so there could be another filter happening. You can see it's kind of in the chop zone here. So anyway, the point is to see how a filter does with the automation, and this is why the automation is so valuable, because you can learn important high-level pieces of information that you'd never be able to learn otherwise. And this helps you with trade planning. If I pull up the strategy report on this trade plan, this is looking back 10 years from this week. And you got to like what you see. I mean, there's not a lot of trades. So I look at accumulation of this and a lot of other charts and trade plans, because with weekly charts, you just don't have as many trades. But over the trades, when you see in a 90+% win rate on a lot of different charts, cumulatively, to me, that works. All right, so anyway, looking at the settings, the trend mode is actually off on this, even though I'm showing it on the chart. All right, so I'm showing it on the chart. Let's look at the calculator. Is the calculator, maybe I don't have it set up right. No, the calculator says true. So that's a mistake. Maybe I didn't finish working on this. It's possible I haven't finished because I use my other computer for these. So I got to turn it off on the calculator. And now you can see the trade shows up. See? But is trend mode better or not? That's the question. And the way you can find out is open up the calculator. This is testing the filter of the red and blue line, right? So now we could see the numbers here on the performance report. A 4.58 profit factor is really good. $15.50 average net profit per share per trade is really good. 24 winners in a row is really good. One loser in a row over 10 years. One loser in a row. Pretty good. These are the numbers I like to look at. Is it better when I turn on trend mode or worse? Let's go to true. Type it in, turn on trend mode, and now we can compare. It's not as good, is it? Everything got cut down a lot. It's still good, but not as good. The win rate dropped from 92% down to 79%. The profit factor was in the 4s. Now it's barely 2. The average profit per share per trade dropped like $4 or whatever. The consecutive winners dropped a lot. You have more consecutive losers. It's not as good with trend mode on. This is a filter that didn't help. Sometimes it helps a lot, but not in this case. And quickly we can find that out. So I'll turn it off again. And it makes a big difference. There's hardly any drawdown at all. And you can see. So in order to not confuse myself, I should literally remove that line. Don't need it. That's just one example. I don't have other charts open at the moment to show you more, but actually I do. I have one other chart open I could show you. Are you guys interested in this or what? I don't want to bore you. If you want, I'll show you one more chart before we finish. Anybody? All right. All right, Pamela, thank you. Yeah, I see people leaving the room, so I know I'm boring somebody. All right, for those of you interested, here is a great market to trade on the weekly chart in your retirement account or any account. I like the retirement account, tax-free or tax-deferred. And this is the SPY. This is obviously one of the most popular ETFs there is, S&P 500. And notice that these all have trend mode. So why are there 5 different trade plans? Because these are trade plans that are each using different trade setups, configurations. White and purple, green and white, green and purple, green only, and then all 3. And you get different trades sometimes. You get different. That's one way to be able to trade more frequently. Because options, you have different strike prices or they're unique trades. Anyway, so let's stay with the one in the bottom right corner again. I have to do a new performance report. This is all 3 setups, so we'll just look at this one. You can compare also. This one does pretty good too. 91.5%. It's almost like USO, right? This is what I mean by looking at cumulative reports and cumulative symbols and getting the same results. 91.5%, 4.84 profit factor. Well, I'm just creating them now, Todd, so I haven't shared these yet. I mean, I'm more than happy to. I'm not hiding them. But this is just my ongoing work. I'm always doing stuff. But, I mean, I'd rather you guys chase down your own ideas. You're going to believe in them more. So anyway, this is well balanced. You can see long, shorts. It all looks really good, right? A little bit losing trade here and there, but that's like 10 years. So that's something to put options into your longer-term options into your retirement account. You had a winning record like that, right? So just following the same line of thought here. This one does use the trend mode. Let's see what it looks like when we turn the trend mode off. Oh, it's still not bad, but it's not nearly as good, is it? Now it's winning 79% instead of 91. The average profit per share went down considerably, like 33rd at least. Profit factor dropped a lot. I mean, it still wins, but that's the difference between trend mode and not, and It shows you how filters work basically over time. This filter anyway. On the other chart, the filter wasn't helpful, but on this one it is. So that's the power of tools. You want to have the best tools, you guys. These tools are available. You should learn how to use them, learn how to deploy them. You can chase down your own ideas. You could build your own roster of stocks, each one tested. Then you don't need a scanner. Then you don't have to hunt. Then you don't have to spend a bunch of time trying to find the setups on a chart that isn't even tested. Then it's just a random shoot from the hip trade anyway. That's why scanners really aren't the approach I would recommend with this style of trading. This style of trading lets you prove that the chart's going to make you money before you risk money. You can prove it at least as best as possible. And then you just focus on the same chart. You can have your workspace, you look at your roster of charts, and that's it every week. Saves a ton of time. This is total Backpacktrader style. Little time as possible. You put the effort in up front, the pre-production work to build it. Once it's built, then you just start trading it. Todd says, I only trade my own too, but having a starting point can cut a lot of dev time off. Yeah, so Todd, I can do a training on this. I'm only testing a few inputs. Like I test like 5 or 6 inputs. That's it. I'm not trying to over optimize. What I am trying to do is tune the strategy to the chart, because with stocks, you have different price ranges and that affects the scale, right? A $400, $500 stock like this is a lot different than a $50 stock, a $10 stock, a $1,000 stock. So I'm usually testing the entry, the stop, and then when I move my money management, when I move my stops. When do I go to break even? When do I trail? That's it. That's all I'll test the trend mode, on or off. So those are like the things I test. That's it. And you could have a format like that. You saw I had 5 charts. You start with default settings. I got the 5 charts, each with the different combination of setups. And then I just go through those few basic tests and optimize. And it doesn't take long. I can test these 5 charts probably less than an hour. So you just learn the routine and then you build it. You build it step by step. So the starting point is what I just said. You create a workspace with the default settings and you save the workspace. The SMA directional, that is the trend mode indicator. It's a 20 SMA. That's what that is. The SMA directional. That's exactly what that is. Whoops. We call it trend mode indicator, but it's the same thing. It's an SMA, blue when it's up, red when it's down, and it's a 20. So that's your trend mode indicator. It's built into the calculator. You could optimize that, but I don't like to do that. I don't want to over optimize. Yeah, that's what I mean. You could do that, but I don't want to curve fit stuff, so I don't do that. I want to see the basic stuff just work. And I know that the 20 SMA is a great pullback zone anyway. So I use it with that in mind. But certainly you could optimize like every single thing in the calculator. I don't recommend it. The reason why I think these have been so successful is because I'm not over optimizing. I'm just trying to tune the calculator to the chart because of the scaling of different price zones. Again, a $400 stock, much different scaling than a $40 stock, etc. So an entry of 20 cents which might be good on a $40 stock, may not be good on a $400 stock. I might want a $2 entry instead of a 20-cent entry, right? That's what I mean. Simple stuff, not overthinking, not over optimizing. I don't need to be perfect, because perfect is not going to hold up on the right edge of the chart going forward. Perfect is what you create looking backwards at what already happened. It's taking a glove and fitting it to your hand. We don't want to do that. We need to have space. We need for the price action to do what it does, and for the chart to be able to live and breathe and not be too tight. We don't want a curve fit. Roger asked, do you fill out all your UTA charts manually, or do you have a program that fills? No, if you're going to use the UTA, you do it manually, because if you do it automatically, you're defeating the main benefit of why you should even use the UTA. And that's to learn the personality of your trade plan, so that you learn how to live with your win-loss column and the random distribution of wins and losses. Psychologically, the three legs to the trading stool, right? Your trade method, your money management. So we know, okay, let's just say counterpunch trader, 2% risk in every trade. But the third one is trade psychology, and that's the one that messes most people up. And if you take one leg away, the stool topples over. All right, but you also have to have a firm foundation to set the stool on. And that is another way of saying you have to believe in what you're doing. It's about proving it to yourself. And once you've lived with some ugly and seen all the great come pouring in and all the winners come pouring in and the equity curve grow while you're living through good, bad, ugly, great over and over, building that win-loss column and all the psychological stuff you go through, that's what changes you and makes you believe in your trade plan so that you can literally trade it and persevere. I don't know anybody that can do that by an automated building of that result. You have to live through it click by click. That's what changes you into a trader. And that's what the UTA gives you. That's the great gift that the UTA gives, but you have to give that to yourself. And if you don't, you're cheating yourself of that third leg of the stool, the most important one and the hardest one to solve, your own trader psychology. That's how you do it. And I know a lot of people resist that. People have fought me on that over the years. Heck, I used to fight the person that taught me that myself. But luckily for me, I heard someone say something, and that was an epiphany moment for me, and it changed my trading career and my life. I wouldn't even have a winning strategy if it wasn't for that concept. And it's literally what I just shared with you now. That's how important it is. I know it's abstract, but trust me, that's the last step you want to eliminate. That's the one you want to guard and fight for. You want to do that manually. Trust me. Do the manual work, and you'll be able to take the next trade per your trade plan rules on the edge of your chart going forward, and then utilize power of compounding and get yourself to critical mass and achieve your reason for trading. If you skip that part, you're always just going to be struggling and chasing the next method and throwing the baby out with the bathwater, always behind the curve, waiting for when it looks safe to trade. You see the winners, you get in at the end of the 3 steps forward. Now you're in the 1 step back, and now you've had more pain than you can handle. You could quit at the end. You quit at the end of the 1 step back, and then you miss the 3 steps forward again, and that keeps repeating over and over and over. That's a result of someone who doesn't do the manual work in the UTA. Anyone disagree? JP, on the CAT RTY 1.6 mom chart that skips trades, it is a function of 2 settings, stop offset and trail EMA length. Individually, they affect the trades. Would you go over those settings and how they could make the TA skip a trade? I'll try. Let me get rid of this. What do I got here? So here's that's a momentum bar. You want let's make that chart up first. It's an M2K. Here's an M2K. All right, I'm going to copy paste and let's make the chart you said first of all. Roger, you know this already. I'm not telling you anything you haven't heard over the years. Sometimes it's good to hear it again, but it's easy to forget also. I mean, how nice it would be to push a few buttons and get all that information, and you can. I mean, with the automation, it's not perfect. With the UTA, you're also putting in the 5% art to trading, other rules that you don't program, like key level adjustments or chart level adjustments or standing down for a news event, et cetera, that you're not going to put into the automation. So the UTA also has you putting in trades while you're incorporating some of the mechanical rules that come from the 5% art, right? That's a whole nother point. It still is subservient to the bigger point I said of building the win-loss column in your belief so that you could solve that third leg of the trading stool, your own trader psychology. You have to believe in what you're doing by proving it to yourself first and seeing that equity grow. The forest grows despite some falling trees, right? If you don't do that, you'll never get beyond that. You'll always be in the trees instead of above the forest. And that's the difference. So JP, it's a 16 tick. Yeah, it's time consuming, but what's more time consuming? That or trying to make up a bunch of money that you lose because you skipped that point and you lost a bunch of money and then you quit and then you didn't make the money that came after. I mean, it's penny wise, pound foolish thinking. Be the CEO of your business and not Roger the guy trying to trade. That's the difference. Don't be the little grunt running around the trees trying to dodge falling trees. Grow some wings, fly above the forest. From a safe vantage point, you look down and see, okay, I could sacrifice a fourth of the trees in my forest, but I'll grow my forest 3/4 larger as a result. And you put the time in pre-production like anything. Think about this. I've been getting into the whole Beatles Get Back series on the Disney Channel. Have you guys seen that? The making of their last album before they broke up. How sad 50 years later, it still hurts to think about, for me anyway. But watching their creative process and the pain and suffering and time that they had to go through to come up with their masterpieces. Use that as a source of strength. The pre-production is where the effort goes. The rewards come as a result of the pre-production when you go into full production. For them, they created classics that, they'll be the modern day Beethoven. They already are. 50 years later, their songs are still played every day, all the time. But they had to go through pain to create each one. And then it was done. It takes nothing to play the song and enjoy it. Is that time consuming? Put it in perspective. Put your priorities where they need to go. The end result is you need to succeed at trading for what that can do for you in your life, right? So you invest in the pre-production so that then you have the song written. And all you have to do is play it each day. Does that make sense, guys? 15 people left the room, so they didn't want to hear it. That's all right. I get it. JP, what's the chart? 16 and what? I don't remember. What's the offset? 4? Is it point? No. What is it? It is oh, it's a momentum chart. Gotcha. I don't know why I thought we were doing with the Renko. All right, so here's a momentum chart, but it's not catapult. Yeah, I don't have the chart handy. Let me see if I have something I can borrow that won't be too different. I mean, I guess I could just go with the custom Renko and change it to momentum. I don't know if it's going to have the same settings, but we'll see if I can answer your question. Whoops. All right. All right. So here, we don't need this. So all I did was copy the Renko chart, and that's what a catapult trade's supposed to look like, isn't it? Beautiful. Let's see what the question is. All right. So, all right, you're turning off the EMA filter, right? I have found that typically is going to give worse results when I use automation, but that doesn't mean in this case it will. But that notice that I've got different inputs. I've got 2. Is 2 and 2 what you got? So I got to read through all the text to figure out what you're doing. FO3 use EMA filter set. You set it to false. Use EMA filter false. What else am I looking at? Trade skips trades, 2 settings: B of A stop offset and trail EMA length. What's your trail EMA length? Did you leave it at default? Your trail EMA length is at 14. BO3 equals 2. BO3 equals is that BO4 equals 6? Oh, well, you're using the cat line. You're also using the so you're trailing the cat line at 3x. You're trailing a 3-bar stop at 6x. Is what's your DO7? Your DO5 is 22, so it's a 22 EMA. And are you trailing a 1-bar stop or a 3-bar stop? And what's your cat line? So you need a cat line input. You need a trail. I need your DO6, DO7, and DO8 because all those have to be the same as well. Those all do different things. I'll make this a 22. So I have to set up the calculator and the TA, JP. This may not be the time to do it. I've got actually another appointment I got to run to. This question you need to bring in earlier. This is too lengthy and too involved for me to try to fix right now. And I don't even have the same calculator on here that you do. And I'm still using a beta version, so there could be an issue. DO6, DO7, DO8. Let me see if I can get all these right. BO3. That's D. That's 2. Your stop offset, I think you have a typo. Is that 4? I mean 6? You have BO3 twice. I'm not sure about that. You have a typo in there. DO5. Stop offset is 16. Killing me, JP. I'm telling you, with all these custom settings, a trade got skipped because something isn't exactly matching. BO4 is... Okay, you just said BO4 is 5, but you said the stop offset is 16, and now I'm just totally confused. I'm not going to do this now. This is too hard. Either you're doing typos or whatever, but BO4 is a stop offset. Okay, I just don't have any of that handy. Yeah. Bring this in early on, do it earlier on Monday or whatever, and I'll help you figure it out. But this is going to take too long right now. All right. And I'm sure if you were to double check everything with a fine-tooth comb, you'll probably find some nuanced input that's different, and that'll be the reason. I mean, it's possible you found a bug, but it's also probable that there's a nuanced input that's just not matching with your calculator and the TA. That's my guess. I'll leave this chart as it is. We'll get into it next time. All right, so hopefully you guys enjoyed this session. It's like a 2-hour session. I will talk to everyone again soon. Hope to see you guys on Monday. Everyone have a great rest of your week, and I'll see you next time.